So, welcome guys about the week second. This is the week second episode two of internal external liquidity to the internal liquidity. We will be talking about that. This is a example of internal liquidity at this area, and this is our drawn liquidity right over here. So I will just mark out with the magnet. It would be clear. So how the external liquidity to the internal liquidity works out, I will be talking about that. Price is moving like this. So when it move like this, it takes outward. It takes out the buy stops right over here. Now we are waiting for what the retracement to price reach up to this area internal liquidity. We can also trade up that movement and the counter trend. We can also trade that and then continue higher with the trend. So I will be talking about this movement, how we can trade about this movement in our trading, and how we can make it efficient, and how can we actually choose our target. So let's into the video. So in this example right over here, this is our external range high taken out. This is a fair value gap presented right over here. This is our fair value gap area presented right over here, and this is external range taken right over here. So I will be waiting for what? I will be waiting for what price to actually close below this candle, or I can do one thing. I can go to the 1 hour time frame and see any sort of structure forming about that. So this is a 1 hour time frame, and we can see in the 1 hour time frame we have actually changed the state of delivery right over here. We have actually changed our trend in the more Mondays. So I will use this, and our main target is what? Our main target is this area. We can just continue further with this trend. So I need one more confirmation is what I need to close about this area. If we close above the low, if we break the low and close aggressively, I can use that as my confirmation that we are going lower. I will be using that. So let's wait for that candle. I will use the replay chart for the better examples. So here is the example right over here. Price is going higher, but still we don't have any sort of confirmation yet. Yeah, we have the confirmation now. We can use the high, which is right over here. This will act as protected high. If price is going higher than this area, then it will invalidate our setup. So I will go in the long short tool. I will short right over here. My stop would be about this high, and our main first target should be what? This area, and our second target should be what? About these liquidities, and we can do what? And we can also trade up to this area, and our stop would be little bit of higher from this area. So the chart is loading. So let it load first. So for the bigger targets, I will be using the higher stop loss because there is a chances that it will take out this liquidity and go higher. So for the example of here, I will be using the higher stop loss, and my target is below this internal liquidity right over here. So let's see how it goes and see how aggressive it was to take out the high and then go lower. And here it has taken out these liquidities, consolidation going on, and our main target is below. Let's see how it goes up to that area. It is just creating the liquidities in these lows presented right over here. And here the day closes Friday. This is a Monday trading day, and our main target is below this area. So let's wait for that. Did we reach up to that area? No, we did not reach. So yeah, this is a gap down opening on the Monday, and see that we have reached up to this area. Now we can trade up to from this internal range liquidity to the external liquidity, which I have told you in the my previous video. You can also watch that. We will use the confirmation tool, and we will wait for what price to close aggressively about this area, and then we can trade that. So this was an example of how the price goes from external liquidity to the internal liquidity. Now we have all these liquidities presented right over here. Now we can expect a sharp move upside like this to take out all these highs, and then it will do the same process of internal liquidity to the external liquidity. I hope you like this video. Thank you. This is a very short video because it is not mainly the theoretical concept. It is very small concept which I am just teaching you, and it's a simplified approach that you can use in your trading. The next content which will be loading, the length of the video will be increased about 15 to 20 or 30 minutes to actually explain you guys. So yeah, this is a perfect example of how the price is moving from external liquidity to the internal liquidity, and you can also access my notes in the library section of the Discord, or you can also use them for the for the notes. So I hope everything is right, and see you in the next episode.